All right, we're live. So welcome back to Dapp University. So today we're going to look at the massive Ethereum supply shock that is here right now. All right, we've been talking about this extensively on this channel throughout this year, how I've seen this coming, and it's upon us, okay? The entire crypto market looks like it's primed and ready for a next leg upward, potentially even to reach new all-time highs on major cryptocurrencies like Bitcoin, Ethereum, et cetera, et cetera. And I'm going to look at the fundamentals today around some of these markets, particularly around the Ethereum assets itself, and say why I think the outlook looks pretty good. Okay, so we're gonna look at that. We're gonna look at a lot of the news updates that have happened in the space since yesterday, and a little bit kind of in some general tech topics and how blockchain can fix this. We're talking about DNS, what happened with Facebook yesterday, a lot of these massive services going down, how that's relevant to blockchain. We're going to answer some of your questions and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below and subscribe to this channel. And if you learn how to master blockchain step-by-step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, nothing I'm saying in this video is not financial advice, and there's lots of scammers down in the comment section below. Just ignore them, like I'll never give you my phone number or ask you to invest with me. So we got people jumping in the chat here. We got Culture Hives, Josh, David, DM, Nick, Lee, Wendy, Bruno, Automatic Beats, Devin Shu, hope I'm saying that right, William, 0FX. Awesome. Welcome, Angela. So let's go ahead and jump into this. So the entire crypto market looks like it's ready for kind of the next leg up. We've been talking about this on the channel over the past couple weeks. I'm actually kind of held that view for the past maybe month or so, but if you look at the charts here, we had a little bit of an upset right here when we were trying to move up last time and had a brief correction, but we're now approaching back to similar levels. Bitcoin's trying to get back above $50,000. Like it is above $50,000, and looking like it wants to break up past this previous resistance. So if we get into 52,000, 53,000 range, looks like we'll have confirmation of that. We'll look at some more metrics around that here in a minute. Other majors looking like the same type of thing, the Ethereum price as well. I would love to see a $4,000 Ethereum relatively soon on the grand scheme of things. But let's actually talk about some of the fundamentals as to how, I see the fundamentals strengthening. And I'll explain what I mean by that because, on this channel, I really try to stick to the fundamentals. I don't do a lot of technical analysis. I'm not really skilled in that area. I think a lot of people, I don't do a lot of TA. I try to stay in my lane, right? Talk about the fundamentals of technology in the space. My long-term thesis on this channel is actually as you create technology with more utility value to it, and you get more people to use that technology with blockchain, and that technology actually has cryptocurrency that's inextricably integrated into that system, that the value can accrue to those cryptocurrencies themselves. So that's part of what I mean about the fundamentals. The other thing that I mean about the fundamentals is actually where is the cryptocurrency, what's happening to it, and how does that impact the supply and demand of the cryptocurrency itself, because that's ultimately what affects the price. So we're looking at the demand side of things. The supply side of things, and that's what I'm talking about with the Ethereum supply shock or Ether supply shock. So anytime a cryptocurrency price goes up in value, more people the demand is increasing relative to the supply, okay? And so let's actually take a look at what's happening with Ethereum supply. So one of the reasons I'm so bullish on ETH in general is what you can do with it, right? There's so much utility value to it. You can use it in DeFi, you can stake it, you can pay for transactions, you can buy NFTs. Those are all reasons why you would create utility and demand for ETH. But let's talk about the supply side of things, because this is another reason I'm super bullish on ETH. We have EIP 1559 implemented, so ETH is actually getting burned and new transactions are created. We'll talk about that here in a minute. But ETH is a really productive asset, and so there's lots of reasons people want to hold ETH in general, not spend it, right? They might want to stake it. Like I was talking about a minute ago, they might want to earn yield on it, supply it to a DeFi application. There's lots of different things. And so for these reasons, we can actually get a clear view of where ETH is just sitting still, all right, and not actually being sold or not actually being used to pay for things, right? So there's lots of different ways you can do this. You can look at the amount of ETH that's currently being staked on the network. You can look at the amount of ETH that's being locked into decentralized finance applications like I was talking about to actually look at get a total amount of ETH and look at that in terms of the percentage of the entire network. So we can look at a few different data points here. First of all, we can see, the percentage of ETH on cryptocurrency exchanges is just continuing to decline. Okay, so you can see that basically one thing that you could derive from this metric is the people's intent to sell ETH in the first place, or maybe once they buy it, maybe it just leaves an exchange. Okay, so this number is going down. So you might also say, well, but hey, you have to counter that with decentralized exchanges. More people are preferring to trade on non-custodial exchanges. And in many cases, either people are, trading peer-to-peer, or they are locking their funds inside of smart contracts to actually power those liquidity pools. When they trade, they're just interacting with the smart contract directly. Okay, so you can counter that by actually looking at the ETH supply in smart contracts. Okay, and the amount of ETH actually locked into smart contracts in terms of percentage of the network is at approaching 28%. Okay, so over a quarter of all the ETH in existence in terms of the supply side of things is just locked up. It's just sitting, doing things. There's reasons why people want to put in these smart contracts. It's probably earning them more money somehow. And so that's going to include a lot of different things. So I'll talk about that in a second, but this is what I mean by the ETH supply shock. Over a quarter of all the ETH in existence is not for sale. Okay, and is not being used to pay for transactions. It's not being used to buy NFTs. It's not being used for any of this stuff, right? So basically, you can take the Ethereum supply, and you could just kind of factor that into things. Like if you were to look at this supply here, circulating supply, okay, you could basically just lop off over a quarter of that, approaching a third of that, and that's really effectively what the circulating supply, which is have a huge impact on the market cap, which has a huge impact on the price. Okay, in addition to the overall cryptocurrency markets continuing to move forward, which I think is happening right now. So that's huge. We can actually look at some more data around ETH, and actually want to look at some more data on the overall crypto markets in general to kind of get a bigger picture of what's happening here. Well, I think the fundamentals are strong, but you can look at so you think about what's happening in the smart contracts. Like I said, it's ETH and DeFi, but you can also look at the amount of ETH that's being staked for Ethereum 2.0, because that's part of what's happening in these smart contract numbers here. So you can look at launchpad.ethereum.org to get a picture of that. So the reason that this is getting counted as ETH is staking, because right now, whenever you're staking on Ethereum 2.0, it's a separate blockchain right now. Ethereum 2.0 is if you're new around here, basically Ethereum is moving from ETH 1.0, which is the Ethereum that you know and use today, to Ethereum 2.0. And this is an upgrade, but it's being built simultaneously alongside the ETH 1.0 that you're using right now. So it's a separate blockchain. And you can stake your ETH right now, which is, staking gets turned on in ETH 2.0. And so it's not existing in ETH 1.0. So if you want to stake, what you have to do is you have to move to this second blockchain. All right. And you do that with essentially this bridge. And with that bridge, there's a smart contract on ETH 1.0 right now where you send your ETH to it and you lock it up. It's called a deposit contract. And so if you want to look at the amount of ETH being staked, that's getting counted in the ETH in smart contracts metric. Okay. So we could see a further breakdown of that by looking at the Ethereum Launchpad website and see that it's actually 8 million ETH is getting staked right now. Okay. So that's getting included in this metric. So you could look at this number. Let's see if it'll tell me by. I was going to try to look at the actual number of ETH. You can look at it on Glassnode. You can look at different. I don't pull it up right now. I was going to try to subtract it from the total number of ETH that's locked in a smart contract to try to show that percentage breakdown is, but I don't have it pulled up on here, and I don't want to waste time on the stream trying to calculate that. You can do that as an exercise if you want to. So, anyways. This is massively bullish for the Ethereum price, okay? And we saw a tweet thread from Raul Paul the other day talking about how, you could see a lot of this space moving really fast, and particularly the ETH to BCTC ratio changing pretty fast on the grand scheme of things, which, I think it is possible. So what is this? So this is the ETH to BTC ratio. This is the ratio of the Ethereum price to the Bitcoin price. And as this moves up, basically what it's saying is the Ethereum price is outperforming. Well, the Ethereum price is more valuable relative to what the Bitcoin price is doing. Okay. And so you can actually look at the ratio on this and see a point at which ETH could potentially flip Bitcoin. So you can look at this website, ratiogang.com. So basically, if the at the current levels, if ETH to BTC ratio gets to 0.16 then it flips it. So right now, ETH would have to be at about $8,000 at the current Bitcoin price of about $50,000 in order to flip it. So some people ask me all the time, can ETH flip Bitcoin? I definitely think it can for all the reasons I'm talking about in this video. The more things you can do with ETH, all right, you can stake it. We looked at so much adoption that's happening in the Ethereum space. It's a very decentralized, secure blockchain environment. Visa launching their layer 2 on top of Ethereum to do, stable coins and central bank digital currencies. All this type of stuff. Major players getting into this space. All the utility and all the supply shock that I'm talking about here is major. So the last metric that I want to look at for ETH that really affects the supply shock that I'm talking about is the ETH being burned. Okay, so right now I'm looking at this. I already see several deflationary blocks: deflationary block, deflationary block, deflationary block, deflationary block, deflationary block. So what do I mean by that? So EIP 1559 was one of the biggest upgrades to the Ethereum protocol, potentially since it's been created, where basically now whenever new transactions are created, ETH gets burnt. So basically this means that ETH is getting erased from the network whenever it gets used. Okay, now you have to offset that with the amount of ETH getting created, because new ETH is getting created all the time to reward miners who are helping run the network. Or that's how Bitcoin works. That's how ETH works. So new ETH is always getting created. Right now, that amount of ETH is getting offset, and if the network activity gets used enough, then at certain periods it will offset it more than is getting created. That's what makes ETH deflationary. And anytime you see more than 2 ETH burned a block, that's when ETH is deflationary. So you can see 6 ETH, 7 ETH, 3 ETH, 4 ETH, 7. So there are several deflationary blocks, and I'll pull up on my screen here. And all this has got to do with supply and demand for the actual network itself, or just demand for the network itself. So now, this is another thing that's impacting the ETH price, because less ETH is coming into the network that can actually affect that supply. But you can simulate the merge. So the thing important to understand is once ETH 2.0 gets turned on and we actually move to that new blockchain and staking gets turned on, the amount of new ETH created by the network itself reduces drastically, It's called the triple halving, so it goes from about 4% a year to 2% to 1% to 0.5%. All right, so that's 3 halvings in a row. Take that number, divide it in half 3 times. That's how you get to 0.5%. So if you can simulate that here and look at the usage statistics, if Ethereum level 1, the layer 1, if the usage stays exactly what it is right now, then the inflation rate is going to be negative 1.9% or 1.9% deflationary, all right, which basically means the ETH supply is shrinking all the time. So if you take that and then you take the amount of ETH that's locked up into DeFi, staked, not doing anything, over a quarter of all the ETH in existence, and that number is trending higher, by the way. So let's say it gets to a third. Let's say it gets to half. Let's say half of the ETH is staked and close to 2% is getting burned every single year. It's absolutely nuts. And you see people like Visa building on top of the Ethereum network. Pretty crazy. So, Yeah, it's absolutely nuts. So let's go ahead and check on some of the other metrics that are I think give a pretty clear picture of what's going on right now. So like I was saying, basically the crypto markets look like they're ready for another leg up. Like I said, I'm not promising to know the timing on any of this type of stuff. That's what I was thinking about a month ago, and then of course we had a brief kind of correction. A little bit of an upset that has really delayed that more than anything. But right now, we're retesting that same level to try to see if we can make it. So let's look at some other data that can kind of give us a clear picture on what's actually happening in the marketplace. So one thing I want to look at is actually what's going on with funding rates, because last time when we saw this kind of brief upset, we had funding rates were significantly higher than they had been before. So what I mean by this, basically, this is the funding rates people who are just trading futures, and so basically when these rates go up, it's an indication of more activity in this way. So you can look that these funding rates kind of spiked, and this spike in funding activity basically coincided with a blow up that caused this next kind of little mini bear market. So this is an indication of people's intent to take excessive risk. Maybe excessive risk is strong, but it's just their appetite for more risk. Okay, and you can see back here, all right, back when we had a Bitcoin all-time high, is back when that funding rate was at an all-time high, essentially, for this historical period. Okay, so you can see where it was relative to the massive blow-up that happened in April, and then you can watch the upgrades tank, which kind of coincide with the bottoms of these markets, and these when you see these peaks, those also tend to coincide with the bigger peaks. So we're back at the same price level that we were at the beginning of September, with less funding rate. Okay, so that's somewhat bullish, but I want to keep an eye on that, because when these funding rates get super high, that's when things kind of get choppy and a little bit uncertain. So that's the historical moving average. So that's going to be a bit of a lagging indicator, okay? So it's a 7-day moving average. We can pull it up. I don't know if I can get the zoom. Hold on. Clicking on zoom. I wanted to get to jump off the page. Expand, maybe that's how it works. Yeah. Anyways, this is a historical moving average 7 days, so it's a bit of a lagging indicator. We can actually look at the current rate, which is getting pretty close to... Let's see here. Yeah, we still have a little bit of headroom from where we were before, but the Bitcoin price, as you can see, is almost the same, right? You can see the ratio here. Like you can see, here's the Bitcoin price, here's the funding rate, here's the Bitcoin price, and here's the funding rate. Okay, so that's what it is currently, or as of yesterday. And then if you look at that chart just a second ago, that's the lag indicator. So we can also check on what's going on with the ETH price, with the overall markets here. Let me just pull it up. Hold on. We can take a look at what's going on with the overall kind of crypto markets with a little bit of macro chain analytics here. Actually, want to look at the net unrealized profit loss of the network to kind of get an idea of where we are. So again, this is a metric that I kind of check a little more when things are crazy. So things are not super crazy right now. It's a little bit quiet, but I think people are kind of starting to pay attention and realize, oh, crypto prices are starting to go back up. Like Bitcoin's trading at $50,000. Like maybe I should pay attention to this. So I think we're seeing some of that as an indicator. I like to watch these metrics a lot more when things are insane, because this is somewhat of a top indicator. So net unrealized profit loss basically compares the percentage of the network that has purchased coins and is now in profit relative to their loss. So basically, whenever you get to these lines in blue, that's usually bad news. Usually, indicates some sort of longer term correction, or top of a longer market cycle. So we kissed that line earlier this year, okay, but we didn't cross into euphoria or that blue territory. So we haven't really had any crazy long bear market. It's been kind of like a slightly bearish, sideways kind of market, kind of crabbish. But anyways, the whole point is whenever the price is correct like this, it actually creates more headroom, and we have less froth in the market, and you can basically get to those higher price levels with less volatility, less euphoria, less leverage, less hot air, less froth in general. So right now we're basically at a neutral metric of 0.56 at about $50,000. And then last time we were at $50,000, we were at, we were at 0.58. So we got a little bit of a difference. But back here, we were at, $57,000 and basically at euphoria. So we're almost the exact same price level that we were back in March, without the excessive froth, which is good for the overall long-term health of the market. Okay, so look at some more kind of things related to crypto, and just the overall blockchain space with the tech and everything. So we can look at, we've seen a lot of questions about stablecoins, particularly from U.S. regulators, particularly the SEC. Kind of wondering where are stablecoins securities? Are people who, like when you use stable coins to do lending, is that a security? All this type of stuff. It's all this gray area. So we've seen that, Circle, the organization that has created USDC, or is backing USDC. I hope I'm getting that right. Has been under investigation from the SEC. We've seen lots of people being scrutinized by SEC right now, but they're fully cooperating with the investigation, but has declined to elaborate on its scope. So we'll see what's going to happen here. We've seen a big push to treat stablecoin issuers like banks, to impose very similar regulations upon them that normal banks would. This is a big gray area for crypto. I think this is one of the reasons that a lot of big money is waiting to get into space, is because of regulatory unclarity. It's unclear from a regulatory perspective on what you can do with DeFi. And my perspective has always been, I think crypto can do just fine with minimal or no regulations, but I do think that the regulations are an inevitability. So when they come, I hope that we can get the most favorable trade-offs. And when that day comes, I expect a lot more people to participate. But typically when that happens, like once the regulations get in place and then people flood in, that's when a lot of the opportunity kind of disappears, because it's not really early at that point, and you're not this like pioneer risk taker with this massive upside potential. A lot of the upside is going to disappear once all this stuff's figured out. And that's why, it can pay to be early. But the good news is you get to front run, the institutions and everybody who wants to play it safe, which just means more opportunity for you. So I actually saw this tweet thread come up yesterday. I guess it's just a tweet. It's a small tweet thread. This is from Kevin Rose, who is the founder of dig.com. So I don't know, there's probably a lot of young people watching this, but Dig was an early Web 2.0 company, online community. And so Kevin has been around for a long time. He's been a household name in early web innovation, kind of really similar circles as like, Tim Ferriss. I mean, if you know who that is, like 4-Hour Work Week, all that type of stuff. But anyways, he was saying that he started Dig, this online community, in 2004 with a dream of community-powered content. So in reality, it was an illusion with centralized oversight. So I'm optimistic that DAOs/Web3 will usher in true decentralized management and decision-making. So future brands will start as community ideas and raise money via DAOs. So ownership will be community level. There will be a role for VCs, but it will be reduced. So VCs will have to adapt and offer support infrastructure, not just dumb old money. So he says, yeah, he likes the new wave. That's a pretty cool, kind of cool insight for somebody who deeply understands sort of the Web 2.0 paradigm and, you know, some of the trade-offs that it makes. And, you know, Kevin's been pretty involved in crypto over the past year or so. He's got that Modern Finance podcast. Definitely go check that out if you haven't already. And if anybody's, you know, watching who, if Kevin's watching or somebody who knows Kevin and wants to come on the channel and talk about this stuff, hey, open invitation. I was on Dig back in the day. That was a long time ago. So I don't know if you all saw yesterday about Facebook, the DNS problem going, you know, Facebook going down basically for Facebook, Instagram, and WhatsApp. All right, so everybody got DNS works. DNS is this antiquated, like really horrible technology that is prime for disruption. Okay, so basically, so what is DNS? DNS stands for Domain Name Service. It's the thing that basically takes your domain name and points it to an IP address of a gateway or a web server where you access a website. So I was thinking about this like a really simple example. Lots of developers watching this channel, lots of aspiring developers, lots of, you know, technically savvy people. So I imagine there's a lot of people here who have created a website before, okay? So here's a very simple example. Let's say you create a static website or like a WordPress website and you put it, like you have a hosting account, right? You sign up, you get on there, you stick your website on there, and then they give you some weird like link that's like, you know, some made up string of words dot on a subdomain like .squarespace.com or whatever, or maybe .heroku app, whatever it is, right? Or maybe you just created on like Amazon S3 or like EC2 or something, and you open your web server to the web, and now you see an IP address. All right, either way, you're just seeing this thing that's not really either human readable or it's not like what you want it to be when people type it into your URL. Maybe it's not what you want it to be indexed by Google. So you put that out there, and then now you need something to now you need to get a domain name for it. Well, now you have this extra step in the equation, or you have to go to a domain name registrar like GoDaddy or Namecheap, all this type of stuff. The thing about it is a lot of these services are really, really bad. I've had some horror stories about how I've purchased domain names and they've taken like, you know, they're tied up for like a month, or like I've done it for professional projects where I've purchased a domain name and we thought we bought it, and then like a week later they sent an email back that was like, oh, actually no, we had to cancel your order. And basically like we'd already proceeded with the project and like done all the naming based on this domain name. So there's so many horror stories. DNS always takes like way too long to populate. If you've ever wired it up and it's like, this will take 48 hours for all the DNS records to populate. Like, it's total BS. Like, it doesn't necessarily do that, and none of this stuff should have to work this way. So this is the horrors of centralized infrastructure, centralized oversight. A lot of this can be fixed, you know, with blockchain, because in the day, all you're doing is managing records. These records could exist on. There's no reason these records couldn't exist on a blockchain. The amount of volume that, you know, happens in the domain space is definitely fit. The number of transactions per day is definitely fit for the scale of blockchain technology now. We see projects like ENS in the space, you know, basically able to register Ethereum-based names, right? We're seeing lots of other, you know, decentralized-based DNS applications out there. In my opinion, it's only a matter of time before, you know, DNS is not really a thing, at least for the Web 3.0 paradigm, right? So I'm a realist in understanding that the future probably, at least for the midterm, is probably some hybrid of Web 3, Web 2. I don't think like DNS is going away tomorrow or anything like that. We might even have a world where we have, legacy Web 2.0 stuff that still runs on DNS in perpetuity, right? I'm not that crazy, but there's a big opportunity to get the benefits of Web 3.0 and DNS that way. Now, I don't think it's going to solve, any instance of any site ever going down. It depends on how it's created, though. So if you, if you were to create something on a more resilient Web 3.0 based network that was powered by IPFS or some distributed file storage, and you had a gate, you could potentially create gateways with 100% uptime. All right, if you have access to the entire network and you now cannot access it through a particular gateway, you could swap it. Right, you could have more resilient things with 100% uptime, at least on the access to the entry point. Now, that being said, you can still do this in Web 2.0. You can have load balancers. You can have all this type of stuff. So I don't think there's any ways to make it 100% fail-safe, but there are potentially ways you can make it more resilient. You can definitely make it more resilient in terms of people coming in and saying you can't run your website on our servers. We've seen that a lot. We've seen that with different political motivations, et cetera, et cetera. People say like, hey, you run a website. We're a hosting company. We don't like what you talk about, so boom, you're deplatformed. You can definitely protect against that. Somebody says Facebook is afraid after the whistleblower statement, deleting all the data. That's awesome. All right, everybody. I went a little bit long today. I don't have a ton of time for questions, but I will do more questions tomorrow. So make sure you tune in. Again, we do these live streams about 9:30 a.m. Central Time, Monday through Friday on this channel. Just subscribe, turn notifications down below. If you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master's shortcut entirely, I can show you become a blockchain master step-by-step from start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp.